How's it going all? Just this week, the Federal Reserve announced 3 potential rate cuts coming in 2024. This caused a rapid drop in yields, and many banks are quickly reassessing their savings rate. So in this video, we're discussing some of the best fixed income assets right now so that you can lock in an amazing rate on your cash in 2024. And let's start off with 1 to 3 month durations on fixed income assets. If you want the best rates for your short-term needs, Treasury bills are the best option. These securities are when you lend money directly to the US government. In return, the interest you earn is exempt from both state and local taxes. They're fully backed by the US government, so you can deposit any amount and earn a relatively high risk-free return. And you can take advantage of these amazing rates by buying T-bills through Treasury Direct, the official government website. Personally though, I prefer buying them through a broker like Fidelity. You're still fully insured by the US government, but you also receive Fidelity's amazing customer service. And one interesting T-bill is this one that matures on February 1st or 48 days from today. It offers an expected yield of 5.345% APY with a minimum deposit of just $1,000. Now, if you want a slightly higher yield, there's a 3-month Treasury offering 5.371% APY. And what makes this yield especially attractive is the tax savings. Keep in mind that the interest you earn is exempt from both state and local taxes. So for example, let's say that I bought the 3-month Treasury at 5.37% yields. Now, if I'm a single guy making $120K per year living in California, this 5.37% yield offers the same after-tax return as a 6.21% yielding CD. That's a phenomenal yield, and it goes to show you why treasuries are especially valuable for those living in high income tax states. Now, if you live in a no income tax state, 5.37% is just 5.37%. There's no benefits. Sorry about that. But for 6-month durations, I would still pick US Treasuries because they offer a bit more value. This Treasury bill here matures on June 13th and offers a very solid 5.3% rate. Another good option is BMO Alto, which offers 5.5% APY. And what's nice about this online bank is that there is no minimum balance required and the interest is paid every single month. So if you live in a no income tax state, BMO Alto is a slightly better option for you. The only real downside about this bank is that it is online only. There are no physical branches to visit, so there's only a phone number to contact for account support. Now for longer term durations, treasuries are not that attractive and banks will offer better value. For example, Presidential Bank offers 5.75% APY on their 7-month CDs with a $1,000 minimum deposit. And this bank is very popular right now because of this special offer, so I'd probably take advantage of that rate before too many people hop in. Now, if you're looking for 9-month durations with a national bank and want great customer service, Discover would be my personal pickup. They offer a nice 5.3% yield on their 9-month CDs. The minimum deposit here is $2,500. Their early withdrawal penalty is also very reasonable at just 3 months worth of simple interest. Another good option would be Synchrony Bank, which offers a bit more at 5.5% APY, this time with no minimum balance. And if you still want a large bank and are okay using a more bare bones mobile app, Synchrony is a perfectly fine choice. For 12-month durations, there are plenty of strong options. One of the most popular ones today is Capital One, which offers 5.25% APY on their 1-year CDs. No minimum balance required, and they have a great mobile app. They're popular for a reason, and they're an easy recommended one. A more niche choice would be Sallie Mae. They offer a bit more at 5.5% APY for their 12-month CDs. The only difference here is that the minimum deposit is $2,500. They also offer a large variety of terms with very competitive rates, so I personally think they're worth considering. The 15-month one is particularly attractive at 5.55%, and their 18 and 24-month CDs are pretty good too. The highest one from a large bank would be BMO Alto at 5.65% APY. There are smaller banks out there like Popular Direct with 5.67% APY with a $10,000 minimum deposit, but because BMO Alto has no minimum balances required, they would be my personal pickup. Of course, treasuries can still be attractive if you are a high income earner. 1-year treasuries offer just below 5% yields right now, and the tax savings can be a difference maker, but I'd run the numbers to find out which 12-month fixed income asset is best for your needs. I should mention that even though treasuries and bank CDs are offering some amazing rates, credit unions could be the best option for you. These tend to be nonprofit organizations, and many have no fee, no minimum balance requirements. Your money is still insured by NCUA of up to $250,000, and customer service can be more personalized for your needs. To receive the best rates, you often have to be a member, and union availability will often depend on where you live. For example, one popular credit union right now is All In. The easiest way to become an All In member is by living in certain counties of Alabama, Florida, or Mississippi. If you qualify, there are some amazing CD rates for you. The 6-month CD offers 5.54% APY for a $1,000 minimum deposit. The most attractive one by far, though, is the 18-month CD with a sky-high yield of 5.69% APY. The 24-month is also pretty solid at 5.48%. Now, if you are a whale and you bring in 6 figures worth of deposits, you could qualify for the 18-month jumbo at 5.8% APY. And this is one of the best rates on the market today, and it goes to show you why credit unions can be a very lucrative option. And for my California viewers, Financial Partners Credit Union can be a very interesting one, especially for those of you who are just starting out building your nest egg. Membership is best if you live in Los Angeles, Orange, Riverside, San Diego County, South San Francisco, or Alameda. If you qualify, there is an 8-month special CD promo offering 6.5% APY with a minimum deposit of just $1,000. It is a phenomenal rate, but the maximum deposit is just $5,000. So for larger investors out there, this might not be the most attractive one, but for those of you who are just starting out, it is perfectly fine. And these are only 2 credit unions. There are many others out there offering some amazing rates, so be sure to check out your local ones to find out which one is most optimal for your own needs. Now, because this channel is just like a fun way for me to share my thoughts, I figured that some of you might be interested as to what I'm personally doing with my own cash. I do have a bit of a complicated investment thesis out there, and I could be totally wrong, so don't follow me. After all, I'm just like a random dude on the internet. But here it is. One of my largest recent purchases is BND, the Vanguard Total US Bond Market ETF. This is a highly diversified exchange-traded fund with over 10,000 individual bonds. A vast majority of them are US Treasuries, and many of these bonds have 1 to 15-year maturity dates. And this means that the average effective maturity is 8.7 years. The current 30-day yield is 4.61% APY. To me, this fund is still paying a respectable yield, and this payout is in the form of a monthly dividend, allowing me to purchase more shares over time and compound that growth. However, why I selected BND over a standard bank CD is hopefully for some price appreciation. If a bond pays a relatively high yield, they are more attractive to investors than a bond that pays less interest. The price of these individual bonds will reflect that disparity in the secondary market. So if rates fall, pre-existing bonds with their higher yields will become more attractive and higher in price. And with the Federal Reserve keeping rates steady right now, with 3 potential rate cuts in 2024, we see that yields on new 5-year treasuries are immediately falling. As a result, pre-existing treasuries are more attractive. And we see that price increase directly in BND, which holds a large amount of intermediate term bonds. When news announced on Wednesday of potential rate cuts, the price of BND immediately rose as well. Therefore, my investment thesis is that as yields continue to fall, pre-existing bonds will increase in value. Now, whether or not the Federal Reserve will change their stance on interest rates is unknown, so there is risk involved. However, because BND continues to pay a 4.6% yield, I'm personally very comfortable with that risk and seeing how this investment turns out, for better or for worse. As of right now, I have a little over 1,700 shares of BND with a solid 3% unrealized gain. Now, when you factor in the monthly dividends, the overall return has been much higher than a standard bank CD or Treasury bill. But again, there's a lot more risk involved compared to a non-variable fixed income asset, so we'll see how this plays out, and I'll be sure to update you as time goes on. As always though, I'd love to know your thoughts and whether you're buying a bank CD, Treasury bill, or bond right now. Rates are changing very quickly, so be sure to find the best one for you. Have a great rest of your day, and I'll see you in the next one. Take care.